Should you put your money in gold, stocks, or real estate? Each investment decision opens 3 distinct paths with different risks and rewards. Choose poorly and you could lose years of potential growth. Welcome to Money Mastery, your guide to smarter investing. We help you achieve both financial freedom and lasting wealth creation. Today we're cutting through the noise with facts, not opinions. Most investors fail not because they lack money, but because they choose the wrong asset for the wrong goal. Picking the wrong asset means missing out on wealth creation, protection, cash flow, or stability. Each asset does a different job. Gold has survived thousands of years, but its real power lies in protection, not growth. Gold protects purchasing power, hedges against inflation, and performs when uncertainty strikes. But gold offers no income, no compounding, and tempts emotional buying at market highs. Think of gold as insurance, not a business. Stocks represent ownership in real businesses, making them the engine of long-term wealth creation. Stocks deliver compounding returns, dividends plus growth, liquidity, and scalable wealth over time. Yet they bring volatility, trigger panic selling, and demand serious discipline. Stocks reward patience, not prediction. Real estate is tangible and physical, something you can see and touch, unlike paper assets. It generates rental income, uses leverage through loans, offers tax advantages, and hedges inflation. But real estate is illiquid, requires high capital, and comes with management headaches. Real estate turns time plus leverage into wealth. Historically, stocks deliver the highest growth, real estate provides stable income, and gold protects capital. There's no universally best asset, only the best asset for your goal. Common mistakes include buying gold for returns, expecting stocks to stay stable short-term, over-leveraging real estate, and putting everything in one asset. Smart portfolio thinking means understanding how different assets work together rather than competing. A balanced portfolio uses stocks as the growth engine, real estate for income and stability, and gold for protection. Smart investors don't choose sides, they build balance. Gold protects your past, stocks build your future, and real estate stabilizes your present. If this video helped clear things up for you, show your support by hitting like and subscribe. Coming up next, we'll tackle something practical and essential for your financial journey. You'll learn how to build a balanced portfolio from scratch, step by step, so you can invest with confidence. Thanks for watching, and I'll see you in the next one.